McGraw-Hill Ascent Audio presents The Insider's Edge to Real Estate Investing, Game-Changing Strategies to Outperform the Market, by James Nelson, narrated by Charles Constant. Publisher's note: this audiobook contains references to material present in the print and ebook editions of the book. Foreword by Ryan Serhant. As a broker in New York City, I get asked for advice all the time. I'm always happy to share my knowledge about the industry, with one big exception. When clients of mine come to me and say, "Ryan, renting out our apartment worked out so well. We want to up our game. We're thinking about buying a building. What do we do and how do we get started? What do we need to know about investing in commercial real estate to be successful?" My response is simple and always the same. Call James Nelson. He's the best. As one of the top investment sale brokers in New York City who has closed hundreds of deals, his experience and expertise can't be matched. James knows the ins and outs of every step of the process, from finding the right property and the right tenants to raising capital. As a broker, I know how complicated a real estate transaction can get, but James's approach to investing is straightforward, clear, and best of all, it works. There is no one more perfectly positioned to write this book than James. The Insider's Edge to Real Estate Investing is a gift to anyone who is thinking about investing in real estate because it tells you exactly what to do. Think of this book as a blueprint for getting ahead in the real estate game. The Insider's Edge to Real Estate Investing covers all the bases, from the fundamentals of investing to putting together the right team of people. Investing in real estate is a big decision. But after listening to this book, you will be ready to take action. You can move forward knowing you've armed yourself with the knowledge you need to be a successful buyer. What are you waiting for? Start listening. Dive into this book, soak up all of James's unique wisdom, and get ready to reap successes. Prologue. Growing up, nobody in my family invested in or even dabbled in real estate. With one exception, my grandfather. Even he wasn't strictly a full-time investor. By day, he worked in the auto industry. Over the years, he successfully ran multiple car dealerships. On the side, he invested in properties to create returns and build his retirement savings. As a child and later in college, I observed my grandfather's real estate investment portfolio grow. While I didn't fully understand it back then, his investments typically consisted of buying the land for his auto dealerships and then leasing that property back to his business. His taste for real estate investments didn't end there. He also bought and sold homes. It wasn't unusual for him to have his hands in multiple projects at once, fixing up places, renting them out, putting them on the market, and so on. Throughout the time I knew him, my grandfather prioritized real estate over other types of investments. He shied away from the stock market, perhaps because he felt like an outsider in that space. In real estate, however, he was a true insider. He possessed a deep understanding of properties, returns, and his own personal tolerance for risk. Thus, he chose to keep his savings and earnings in that market. I recall hearing him often repeat the adage first coined by Mark Twain: "Buy land, they're not making any more of it." My grandfather had an innate appreciation for assets that could hold their value, and better yet, grow in their worth, especially when they did so because of his work. He knew when to acquire properties, how to reposition them, and how to structure deals for a great return. Perhaps most importantly, he wasn't afraid to dive in and take calculated risks. Sure, he learned from his mistakes and then applied those lessons to his next efforts. His drive for discovering new insights and moving forward reflected in the real estate empire he built over the course of his lifetime. Only after I had graduated from college did I begin to fully grasp my grandfather's dealings. Reflecting on it now, I am forever grateful for that glimpse into the strategies he incorporated. It certainly played a role in my life later, when I ended up walking the streets of New York with a job in real estate. My pathway to the financial capital of the world and a career in real estate wasn't direct. I was born in Madison, Wisconsin, where my father worked as a general practitioner. When I was 10 years old, he received a job offer to work at the Washington Hospital Center, the largest private hospital in the nation's capital. He accepted, and the position prompted a move for our family to Bethesda, Maryland, right outside the northwest tip of Washington, D.C. I started 6th grade after the move and dove into our life in our new area. In a sense, I literally dove into a pool. I took up swimming and went on to compete as an athlete in college at Colgate University. When selecting a major, I chose English. During those years, there was no real estate program available. I found time to study between swim meets and eventually went on to become captain of the swim team. While I could maneuver my way around team sports, competition, and what it took to get a liberal arts education, I didn't have a strong direction toward the future as graduation neared. At the start of the spring semester during my senior year, I was still trying to figure out what exactly I was going to do once school ended. Options abounded. I tossed around the possibility of moving to the West Coast to make movies. That had a strong appeal, until I learned no one was willing to pay me a salary to create films. Also, I didn't have any money to get started on my own. My first real estate job. I knew some of my friends were going to New York City to work after college, so I decided to check out the jobs available there. During March of my senior year, I went to the Career Service Center on the Colgate campus with a copy of my resume in hand and asked about job openings. As it turned out, Massey Knakal, an investment sales brokerage in New York City, had a posting there. The firm, which was founded in 1988 by Robert Knakal and Paul Massey, was looking for a sales associate. The job posting included a deadline for applying, which happened to be the very day I was in the Career Center. I asked if a cover letter was needed to show I was interested in the position. The answer? No, just a copy of your resume. Fortunately, I still had that copy on hand. I quickly dropped it in the appropriate box for the job posting. To my immense surprise, given that I had virtually no background in real estate, a week later the company called me and requested an in-person interview. We set a date, and when I went to New York for the interview, I was taken aback by the city's size and grandeur. I had been in the sprawling metropolis a couple of times before, as my roommate in college was from New Jersey. On visits to his home, he had taken me around New York City, but this was the first time I ventured in on my own. I walked up to the office for Massey Knakal, which was impressively located on luxurious Park Avenue. During the interview, my knowledge about real estate was confirmed, which consisted of nothing beyond my observations of my grandfather's dealings. Fortunately, they were willing to look at some other aspects of my background, including my leadership on the swim team and willingness to work hard. So I was hired. A week later, I learned that I was actually their second choice. Only 2 people had applied for the position, and they had first offered the job to the other candidate, who accepted. Then they decided they wanted one more associate and resolved to take a chance on me. Perhaps it was meant to be. I had a great vibe about the place from the very first handshakes with the owners. The first hire lasted 6 months. I ended up staying at Massey Knakal for 17 years, becoming a partner and helping build the company, which became the #1 sales firm in NYC. We ultimately sold to Cushman & Wakefield for approximately $100 million. I had 3 great years there alongside my partners until I was given an incredible opportunity to build out Avison Young's investment sales team. From day 1 of the job, I knew I was in the right place. Under the title of broker for the firm, I set out on foot to get to know my area. Massey Knakal had developed a territory system in which they divided up New York City into 50 sections. Each broker covered a specific neighborhood. Mine consisted of Chelsea, a dense residential quarter with restaurants, bars, cafes, and parks. I was tasked with getting to know every owner, every sale that took place, and everything else that was going on in the section. Like my associates, I went from one building to the next, taking pictures of each property. We would place the photos, along with other information about the location, in a 3-ring binder we called the owner's book. Soon immersed into the fast-paced, highly intense real estate scene, I found myself competing against seasoned brokers who had 20 or more years of experience in the business. Despite the tough competition, I brought clients into our brokerage firm, and owners started asking me to oversee the sales of their properties. The key to my quick success lay in my eagerness to learn and become an expert. I knew more about my assigned neighborhood than brokers from competitive firms who were present in the space but acted as generalists. They knew a little bit about a lot of things. I, on the other hand, became a source of insider information on Chelsea, as I had knowledge that few others did. It gave me an advantage over others, simply because I could share tips, such as the most recent sales, new retailers coming to the area, up-and-coming developments, and recent changes in the zoning codes. Zoning refers to the laws and regulations in a city that govern how a property can be used. Let's pause for a moment here, as you may be thinking, James, isn't this supposed to be about real estate investing? Don't brokers oversee the transacting and not the investing? Let me explain. Yes, my career has consisted of being a broker in my day job and helping owners sell buildings. Like my grandfather, however, I have made my own investments over the years. I have purchased and sold properties as an investor and monitored my own returns. Unlike my grandfather, I have been an eyewitness to the inner workings of both buyers and sellers and have the benefit of an extensive network in New York City. I have picked up insider knowledge through these experiences and my connections with other highly successful investors. It must be said that when I'm working as a broker with a seller, helping them through the sale of a property, I don't put on my buyer's hat, as that would create a direct conflict of interest. In a similar way, when I'm helping a buyer go through the transaction of purchasing a property, I put the buyer's needs first and don't issue my own bids. This code of ethics spans across the industry for brokers, as expectations are set that we are prioritizing our clients' preferences and not imposing our own interests. As you learn more about buying and selling properties, or may already be aware, you'll see that many brokers, myself included, do make real estate investments. I occasionally have an opportunity to buy of a different broker as representing a seller, for instance, or I might form a partnership with another investor, and that person will oversee the purchasing and managing of the property. Again, in these instances, I avoid conflicts of interest with clients who come to me for broker services. Getting back to my story, after starting as a broker for Massey Knakal, I went on to join Avison Young. There, I became principal and head of the firm's tri-state investment sales group, leading a group involved in the sale of multifamily, retail, office, and development properties throughout the country. Insights, knowledge, and tenacity. As I reflect on my career, I'm deeply thankful for the individuals and firms that held out a hand and helped me along this journey. I've been involved in some fantastic deals and gained new insight at every step. I've learned tough lessons from watching an occasional opportunity slip by, but I've also followed my grandfather's logic and moved on, applying new strategies to the next deals based on those less than ideal experiences. Having this inside seat both as a broker and investor has allowed me to analyze countless investment properties, underwritings, well-thought-out business plans, and deal structures. Since my firm values hundreds of properties every year, I can very quickly identify if a building is being acquired for less than its market value, or more. This is essential to understand how to outperform the market. I've worked with a long list of brokers, investors, attorneys, architects, designers, contractors, managers, and other real estate professionals, and spoken in depth with many of them to understand their personal challenges and success stories. On the investment side, I've had the privilege to partner with other investors in dozens upon dozens of opportunities, which has enabled me to see how different players operate and interact in this industry. The more experience I rack up in real estate, the clearer it becomes to me that it takes more than having a knack for numbers or being able to invest large amounts of personal wealth to get great outcomes. To outperform the market, there's a stroke of creativity needed. I personally love to dig in and think about innovative ways to view an existing or upcoming property. The only limitation is your city's zoning perimeters, which can sometimes be amended. If you can dream up a new plan, or work with someone who can, you could add value to a place and be compensated for those ideas. I've carried out this strategy time and again, so often, in fact, that I've established a reputation for finding great opportunities and working with the right team to reposition a property and outperform the market. My partners at Massey Knakal launched a fund with River Oak, an established asset management firm. This fund essentially allowed others to contribute anything from $100,000 to $2.5 million and pool their contributions to invest in value-add investments in New York City. I worked with partners to raise 2 successful funds, totaling around $50 million in equity that we ended up investing in over 30 properties, with an overall capitalization of around $350 million. All these investments and the chance to view an ongoing stream of transactions grow across my desk has been a fascinating, invigorating journey for me. I share my story to show that the possibilities are out there, and that you don't need a certain set of credentials to get started. I certainly did not. My path to success has greatly been generated by my willingness to learn and to move forward. During my time in real estate, I've found that fear can hold back would-be investors. They aren't sure if an investment is a great opportunity, if the property will generate a return, if they'll be able to raise the money needed, and so on. I'm here to say that for those that look at real estate investing as a way to solve problems and find a solution, the opportunities are endless. Even if things don't work out perfectly, you can find a way to move on and try again. Keep swinging, so to speak, and you'll eventually hit that home run. In addition to recalling my grandfather's dealings, one phrase he often repeated will always stick with me. He said, "The most important thing for success is tenacity." His words, as they did back in my early years, still ring true today. Not every step will go smoothly, but having the determination to work through challenges will equip you with the right skill set for this space. Furthermore, my goal with telling my story and writing this book is to give you the resources needed to get started, understand the basics, dispel any fears, and be inspired to set out on your own path. During my years in this space, I've learned that it's an insider's game. Who you know matters. I've also found that it's not easy to discover all the information you need to become successful. That's why I'm eager to lay it out here and share both my experiences and knowledge with others who want to pursue their own investments and build their own legacies. When you do, I invite you to reach out to me and share your own story. My guess is that it will be just as exciting and fascinating as my grandfather's and the very stories I've experienced and recounted in the pages that follow. Introduction. If I told you the U.S. real estate investment market is valued at nearly $21 trillion, and nearly half of the properties on that market were purchased by individual investors, would you be surprised? These numbers don't always make the headlines, but they reveal an important opportunity. Clearly, there is a wide selection of property available for those who are prepared and well-equipped to jump in. Better yet, take note of the term individual. You don't need to be a large corporation, a founder of an equity firm, or part of a real estate investing company to take part in these deals. While substantial players certainly are active in the market, there's plenty of space that can be taken up by a single person, someone investing with a partner, and really any individual interested in making the leap into real estate investing in the United States. During my more than 20 years of experience in the U.S. real estate industry, I've met a long list of incredibly successful investors who saw the chance to participate in the market, and after starting, many times from ground zero, they built their way up to accrue fortunes, created a legacy, and even had the chance to give back to their communities and the charities close to their hearts. Their efforts took time and plenty of grit, not to mention a bit of risk, which is inherent in any type of investment. Although their individual experiences are unique, they tend to share a common thread that mirrors my own story. For those with an inside edge, the sky is really the limit in terms of the rewards you can reap from real estate investing. When I began my real estate career, I hit the pavement and worked my area in New York City until I knew it like the back of my hand. As the deals came, I put my research into action and went after the ones to which I could add value. Along the way, I built up an intricate network and made friends with everyone from New York's wealthiest families to the superintendents sweeping outside the apartment buildings in my neighborhood. I learned the ropes and built experience as a broker, which gave me the chance to view or be involved in thousands of deals and participate in more than $5 billion worth of sales. I've been an investor myself and have spearheaded funds to allow others to do the same. Real estate offers better opportunities than stocks. Here's what I've learned. When it comes to real estate investing, the field tends to be opaque and inefficient. Unlike other types of investments, such as stocks and bonds, it's not easy to see all the options available and carry out transactions quickly. With stocks, you can pull up listings on the site of your choice and see how your selection, or the investment you're considering, has performed in the past. You might read about the company, follow the numbers, and even take into account forecasts that lay out future expectations. And guess what? Everyone else who visited those sites has the same information. In a sense, this makes stocks more transparent. It puts us all on a level playing field where we share common knowledge. Now, I can control how I invest my funds in the stock market or talk to my wealth advisor team about their recommendations, but that's about where my involvement ends. I won't be sitting in on a board meeting, getting the inner scoop that is hidden to the public eye. In fact, the law prohibits insider trading. In that sense, if you or I know too much, we could, in theory, be facing a legal discussion, which, of course, we don't want. Instead, we line up with the other players and watch the stock market click along in this open arena. If the stock market were a hand of poker, it might be one in which we all saw each other's hands. Real estate investing, at its essence, is a completely different game. It's a bit more like the poker interaction we're more familiar with, one where everyone holds their cards close to their chest. How do you know what cards the person to your left is holding? It's up to you to figure it out. There's no complete listing that lays out all the possible real estate investments in a particular area. While you might use Zillow or Trulia when shopping for a residential home, there is no single site available online where you can find all the apartment buildings, office spaces, condominium complexes, and industrial centers that are on the market. What you find will be incomplete listings or a handful of options available to the public through different sources, such as brokers. There are many properties out there every day that are not listed for all to see but are very much on the market. You just have to know where to find them. And that is part of the magic of real estate investing. If you have the inside edge, you'll be able to, first and foremost, locate the deals available. You'll also have the knowledge needed to identify the gems, build the right team with whom you'll make and manage the investments, and then take the properties to the next level, either by renovating them or thinking creatively about how they could be positioned in the market. Once you've put in the legwork, you can decide if it's best to sell or reinvest to up-level your game, or keep the income-generating asset while hunting for more. If you're new to this game, you might be wondering how you can get into this space. You may not have experience or even have the deposit money required to do a transaction. Let me assure you, the most important thing you can bring to the real estate table is a deal. In most markets, there are always more buyers than sellers. Finding the great opportunities is the hard part. If you can discover these, you can bring in a partner and move forward, and I'll tell you how to do exactly that in the chapters to come. This process is exciting, and it brings in a whole new set of possibilities to the investing space. While I would argue that other opportunities, including the stock market, mutual funds, and 401k accounts, certainly have their place in a diversified portfolio, real estate stands out as a way to build massive wealth on your own terms. Whether you have $25,000 or $1 million to invest, there are plenty of ways to put those dollars to work in properties and generate income. In addition, thanks to tools and resources today such as crowdfunding, there are ways to invest smaller amounts, meaning the playing field is more open and the barrier to entry is lower than ever. There's another aspect of real estate that can generate wealth growth, and it lies in the ability to leverage your investment. Think of the mortgage on a home, in which the buyer offers a down payment and takes out a loan. Perhaps the home's sale price is $1 million, and the purchaser puts in 30% or $300,000 as a down payment, and then takes out a loan for $700,000. The individual now has an asset worth $1 million, with only contributing $300,000 to the investment. If the property appreciates, the bank is not participating in that upside. Unfortunately, the bank doesn't share in your losses if the property drops in value. For investment property, you also receive the benefits of cash flow. If you finance an investment and the property generates a higher return, known as a capitalization rate, which we'll get into in Step 5, than the interest rate on the loan, then you'll benefit from a positive cash-on-cash return, another point we'll discuss in depth in Step 5. Once the value of the property has increased, you can refinance out some or all of your equity. Finally, there are incredible tax advantages to investing in real estate. A substantial one is a 1031 exchange, where you can defer your gains into another like-kind investment. Like-kind is an industry term which refers to properties that are of the same nature or character. They could differ in grade or quality, though. Think of these investments like a spiral going up. After initial transactions, you can potentially purchase higher-priced assets, which lead to more returns, and so on. Given the substantial opportunities in today's real estate investing market, you might think the space is overloaded with investors. In my experience, I've found the opposite is true. Few take advantage of the deals and profits that could be made. The majority simply don't know how to find great value and make a dream of real estate investing turn into a reality. You can change those statistics, and it starts with becoming an insider. That's what this book is about, and in it, I'll outline the steps to follow. The setup is simple and straightforward. There are 10 steps, and each chapter focuses on one step. I will try to be as specific as possible with real examples, so you will know precisely what to do. By traveling down the path I lay out, there are deals to be made, profits that could skyrocket, and a lasting legacy to be generated. Let's get started. Step 1. Find the right property type. In the mid-1990s, Sam Zell bought a mobile home park. At the time, practically no other real estate investors were interested in mobile homes, which made it easy for Sam to keep buying more. His focus paid off. In 2016 alone, his company, Equity Lifestyle Properties, the largest owner of mobile home lots in the United States, made $869 million. Of particular significance is that Sam didn't have an extraordinary advantage over others in the real estate market when he began his journey to building a fortune. He didn't have a specialized background or an ultra-privileged education. Sam's parents immigrated to the United States shortly before Germany invaded Poland in 1939. Their route took them through Japan, and they arrived in America in 1941. Sam was born just 90 days later, and the family settled in Chicago, where Sam's father worked as a jewelry wholesaler. One lesson that Sam's parents emphasized during his growing years was to work hard and strive to move up and build a better life. This trait stuck with him as he entered early adulthood and took on his first jobs. During his college years at the University of Michigan, Sam and a friend managed student apartment units for a landlord. He went on to purchase and sell his own properties, flipped some homes, and explored different types of real estate investments in the years following college. You might say that during this time he built up his inside knowledge of real estate. This insight, learned through experience, eventually led to his discovery of mobile home parks, a relatively under-recognized investment during the 1980s and 1990s. You don't have to follow in Sam's shoes, but we can all glean several lessons from his story. First, there's value in starting small and working with a partner, in Sam's case his friend, to understand the inner workings of the real estate industry. You'll almost certainly be involved with a partner on your first deal, and this person should be someone you know and trust. We'll cover that more in Step 2. Second, once you find the right property type, you can jump in and look for ways to add value and accumulate more properties. Finally, you can diversify as you go. In other words, you can branch into different property types as you proceed down the path of real estate investing. It all begins with an initial investment and choosing a property type. Glance around your neighborhood and you'll likely be able to start a list. If you're located in a city, you might see multifamilies, office buildings, retail, medical, industrial, and land for sale. This plethora of real estate can be grouped into sections called asset classes. When we talk about real estate
Sample complete. Ready to continue?